After the Great Recession of 2008, Congress decided the country's financial markets needed more oversight. So it passed the Dodd-Frank Act, which President Obama signed into law in July 2010. Dodd-Frank authorized the creation of the Consumer Financial Protection Bureau, the CFPB, to focus on enforcing federal consumer financial laws and protecting consumers in the financial marketplace. The CFPB's prime directive is to ensure that financial products offered to you are fair, transparent, and competitive. A lot of the rules they make or are considering could directly affect your pocketbook. I'm Herb Weisbaum, a contributing editor at checkbook.org.
Welcome to Consumerpedia at checkbook.org. We're the nonprofit that helps consumers select services, avoid trouble, and save money. Because we don't accept any advertising or take money from any business we recommend, you can rely on checkbook.org to be completely independent and objective. Now, here's the host of Consumerpedia, America's consumer expert, the consumer man, Herb Weisbaum.
The Consumer Financial Protection Bureau deals with lenders, bank accounts, and payments. So that means everything from mortgages and student loans to credit cards and auto loans, plus credit reporting agencies and debt collection. It has a number of initiatives and proposed rules in the pipeline that you should know about and may want to comment on. Our guest is Brian Shearer, Senior Advisor to the Director of the CFPB, and he joins us from the nation's capital.
Thanks for having me.
So before we dive into the nitty-gritty of what the CFPB is doing, I'd like to hear how you describe the financial marketplace right now.
Well, we're coming off a pandemic, and interest rates are rapidly increasing, and that means the price of credit is increasing for American families. So we're keenly attuned to the fact that people are struggling right now. We've seen a big spike in auto lending over the last decade, and credit card balances are around $1 trillion now total in the United States. Student loan balances are nearing $2 trillion. And so indebtedness is rising, the price of credit is rising, and people are hurting. We're also in the midst of a lot of technological change in our markets. Lenders are increasingly using advanced underwriting. Data brokers are more prominent than ever. We're just now seeing new AI chatbots proliferating through banking, and so it's a busy time.
So the CFPB, along with a number of other federal regulatory agencies, is really focused right now on eliminating junk fees. Tell us about that.
Junk fees are unnecessary, unavoidable, or surprise charges that inflate prices while adding little to no value. We have a lot of projects at the CFPB that are focused on junk fees because we found that they are quite prevalent in banking and consumer finance, and they take many forms. These are high late fees, overdraft fees, fees to make a payment, return deposit item fees. There are a whole bunch.
And a lot of our transactions are taking place online these days, and a lot of decisions are being made by algorithms. That must make your job more challenging.
That's right. Algorithms can automate decision making, but they also introduce a lot of issues. There's a bias problem, there are accuracy problems, just the fact that it feeds additional data surveillance. So we're focused on that issue and have concerns.
Yeah, a lot of people don't realize that. You say, well, it's been done by an algorithm. It has to be free of discrimination or free of bias. Algorithms can be every bit as biased as the people who write them, right?
That's right. And just because an algorithm did it doesn't mean the company didn't do it. If an algorithm causes a company to violate the law, the company violated the law, and that's the way the CFPB looks at it.
So let's dig into some of these specifics. President Biden made it really clear in his State of the Union address that he wants to reduce or eliminate junk fees. And in February, your agency, the CFPB, proposed a rule that would cap credit card late fees at $8 and require banks and credit unions to justify any future price increases. That would be a pretty dramatic change from where the marketplace is right now.
That's right. Congress passed the CARD Act in 2009 to limit late fees to a reasonable and proportional amount, and our proposed rule is seeking to ensure that that is what is actually happening. At the time that the law was passed, the Federal Reserve created a rule that, after inflation adjustments, allows late fees of up to $40. And we're looking to see whether that's reasonable and proportional. Our research found that late fee revenue is about 5 times higher than the actual costs that banks are incurring because of late payments. So our proposal is to drop that $40 down to $8, which is 1/5. This is just a proposal, and we will be deciding whether to finalize that $8 threshold.
So this is a really important point because we're paying about $12 billion a year as a nation in credit card late fees. And the banks have always insisted that these fees are the cost of doing business. Oh, it costs us money to handle all this. And based on your analysis and data, you're saying it doesn't cost them anywhere near the $30-$40 they're charging for late fees. It's pretty close to $8 per transaction.
Yeah, that's right. I mean, certainly some of it is necessary to pay for the costs of handling late payment, but we're finding that $12 billion a year is more of a profit source than it is just covering costs. And we're looking into whether that's consistent with the law, which requires these fees to be reasonable and proportional.
Your director, Rohit Chopra, has called this a multi-billion-dollar bonanza that punishes and penalizes consumers when they make mistakes. And he even suggested in a news release announcing this proposal that credit card companies could actually be hoping that consumers are a day or two late because they're making so much money from this. Is that why you're talking about the possibility of down the road some sort of grace period, similar to what's common when we pay our rent or our mortgage and that sort of thing, that if it's midnight and you pay your bill at 12:01, you don't get dinged with a late fee?
Yes, we're asking for feedback on whether we should impose a grace period. In many instances, consumers are being penalized for missing their due dates by an hour or 2 hours or maybe a day, which doesn't cost the bank much, and it's just penalizing people for making a harmless mistake.
So the CFPB, as you mentioned, focused on a wide variety of junk fees that are charged on all sorts of financial products, from bank accounts to mortgages to student and auto loans. Give us an idea of what you're looking at in this whole area of junk fees.
Junk fees are unnecessary, unavoidable, or surprise charges that inflate prices and add little to no value. We're looking at projects throughout banking to address the junk fee problem. This includes the late fee project we just talked about, overdraft fees, return deposit item fees, pay-to-pay fees. We're looking at fees that banks charge for customer service experiences and others. And so we're taking a broad look. We had a request for public input that we issued last year to kickstart our junk fee initiative, and we were overwhelmed by the response. We received over 80,000 comments from the general public. And so we think we struck a nerve in that this is an issue that Americans care about.
I certainly know I do. And especially when the junk fee is something that's a surprise that I wasn't aware about. That's an even worse problem in my book. Not only are you hitting me for something you don't need to do, but you're keeping it hidden somewhere till the very end, or I can't change my mind or whatever.
That's right. Often these fees are undisclosed, or if they are, they're disclosed in fine print that you don't read. You know, none of us read the fine print on every agreement that you sign. And so they're often surprises.
And this is adding up to a lot of money. We're talking billions and billions of dollars here across the economy.
That's right. Late fees alone make up $12 billion, and that's just for credit cards. Overdraft fees are similar in amount, and they all really add up.
You're also looking at marketing practices that trick people into signing up for subscriptions that have recurring charges and that are difficult to cancel, or in some cases impossible to cancel. And you took enforcement action against credit card issuers that deceptively market optional add-on products. Can you tell us about that?
This is a practice that we call negative options marketing, where you sign someone up for an ongoing relationship, and then the relationship continues unless you opt out. Often companies will make it very difficult to opt out through digital dark patterns or similar practices. And in fact, we just issued a policy statement on the legal prohibition against abusive practices and highlighted how digital dark patterns, like this practice of engaging in negative options marketing and trying to obstruct people's ability to opt out, can be illegal.
For years, we've warned people that these free trial offers, in most cases, you're automatically signed up, enrolled in some sort of subscription program after the free trial ends. You may not even be aware of it because it may be in the fine print or buried somewhere in the terms and conditions. And they can charge you because they already have your debit card or credit card number because you had to give it to them in order to get the shipping for the free product or service you wanted.
Yeah, it's a problem throughout the economy and also in consumer finance. And depending on the way it's done, it's often illegal.
Now, credit reporting agencies are giant companies that few of us know about very much, but they have a great impact on so many aspects of our financial life. And we're going to talk to Brian about that next. You're listening to Consumerpedia, powered by checkbook.org.
If you like what you hear, we hope you'll consider being a Consumerpedia supporter by using the link at the bottom of the show notes to make a small contribution each month. This is Consumerpedia.
Brian Shearer is Senior Advisor to the Director of the CFPB, Consumer Financial Protection Bureau. That's a federal watchdog agency that regulates a wide range of financial products and services, from credit cards to credit reporting agencies. Brian, the CFPB issued a report in January that was based on an analysis of nearly 500,000 consumer complaints about credit bureaus. This is something the CFPB does every year, and it's clear looking at this that year after year, the big three credit bureaus, Equifax, Experian, and TransUnion, top the list of complaints submitted by consumers to your agency. What are the most common complaints? What are the things people are complaining about the most?
Well, first, that's exactly right. We receive more complaints on the credit bureaus than any other market by a significant margin. Like you said, in 1 year alone, we received about 500,000 complaints, and that's up more than 200% from 2020. So it's increasing and really spiking. The major issues we are hearing about are the same issues we've been hearing about for a while. False reporting, problems with investigations about false information, and improper uses of people's credit reports.
And I've been reporting on credit bureaus for years, and one of the problems that never seems to get better, and you mentioned it, is response to consumer complaints. We're constantly told, get your free credit report from Experian, Equifax, and TransUnion at least once a year. Look for problems, and if you notice mistakes or anything suspicious, contact the credit bureaus. But you're saying that many people do this and nothing happens.
That's right. It's a huge problem. It's one of the top complaints we get. Consumers have a right to due process under the law if they find errors in their report, and it is, one of the key methods for maintaining accuracy in the credit reporting system. We're worried that increasing automation and corner cutting is increasingly making the dispute process ineffective. Remember, with the big three, you are not the customer. Companies that they sell reports to are the customer, and so they don't really have an incentive to do right by consumers other than the fact that the law requires them to. And in fact, we at the CFPB experience this kind of runaround treatment that consumers receive firsthand. In 2020, when the complaint rates rose, the big three bureaus decided at the same time to make tweaks to their responses to the complaints that the CFPB receives. And they claimed that it screened out unmeritorious complaints automatically. We didn't buy it, and so we kept at it. And in 2021, we issued a report to highlight the fact that the big three weren't responding to our complaints. And to their credit, they shifted course after we called them out. Now the credit bureaus are responding again, and they're finding that a lot of complaints actually did have merit. Before the change, they were giving relief to 3% of complaints, and now they're back up to about 50%. And so that's a huge difference. But my point is, we haven't seen any other market engaged in this kind of conduct. We saw firsthand that the bureaus were willing to use automation and corner cutting to kick hundreds of thousands of meritorious CFPB complaints off the system and not respond. And for companies that are supposed to have a lengthy and thorough due process investigation process as a core feature of their business, it's really concerning.
And let's be clear, a mistake in your credit file can be more than just your age or your address. Something in there could keep you from getting a student loan or a car loan or drive up the interest rates you pay on credit cards. This is a serious kind of mistake in your life that you don't want to happen. Or if you find it, you want to correct it.
That's right. Your credit report can affect whether you can get a loan, the price of a loan that you can get. It can also affect whether you can get a job, security clearance if you work for the government. There are lots of implications. So it's really important that the information be accurate, but also that consumers' dispute rights are honored.
So is the CFPB considering some sort of new rules to ensure that the credit bureaus do what they're supposed to do and treat us fairly?
Yes, we are. The Fair Credit Reporting Act, which is a federal law, requires that agencies not engage in false reporting. It gives consumers a right to see their data. It gives consumers a due process right to challenge errors, and it strictly limits how this information can be used. And we're focused on those 4 key pillars of the law and looking to update our regulations for the 21st century. At the moment, we have an open docket to collect public input on this effort, and you can go to our website to submit a comment.
So if someone listening feels they've been treated unfairly by a credit bureau, maybe they reported a problem, it wasn't fixed, you'd like to hear from them?
Yes, absolutely. And in addition, we're also looking at the newer data broker market. as part of this effort. In the 1970s, Congress passed the Fair Credit Reporting Act to regulate data brokers. And since that time, the market has shifted and has found purported loopholes to the point that only a few data brokers are actually following this law. And so we're looking into that in particular and whether data brokers should be regulated under the FCRA.
What's interesting is you just mentioned the client for the data brokers and also for the credit bureaus. We're not the clients. The clients are the companies that buy this information or use this information. You would think for their clients, they would want to have accurate information in the files as well. They may be able to lend money to people who they can't because the information in the file is erroneous. It would seem like from both sides they should be getting this right, not let alone that it's the law.
That's a good point. Both consumers and also banks and other financial companies have an interest in this information being accurate. And it's really not just, a consumer protection issue. It's also an issue for the banks and whether they're able to conduct accurate and appropriate underwriting.
So let's shift gears here a little bit. The internet has made comparison shopping really quick and easy. It's made it incredibly easy for websites that seem to be providing objective information to steer us to companies that are actually paying them for referrals. We may or may not know about it. When digital platforms do that to people shopping for a mortgage, limiting their choices to companies that pay them a referral fee, that's illegal, right?
Yes, that's what we've said in a recent guidance document. Digital comparison shopping platforms are common features of the modern economy, and people use them to find providers. But if these tools are being manipulated with kickbacks, it's a real problem, and we've said it is unlawful.
So you've been looking into these pay-to-play tactics. Tell us what you see, what's going on, and how this possibly could be changed to the benefit of consumers.
I think your listeners are probably familiar with these tools. They're, online websites that you go to shop, and you type in some basic information. Maybe you use filters to let the website know what you're looking for, and it gives you offers, and often they're ordered by what's the cheapest. In an ideal world, people can use these tools to shop, see offers, and ultimately find the cheapest one for them if that's what they're shopping based on, price. But the thing that we're worried about, the problem, is that often these platforms are manipulated by kickbacks, where the offerers that are appearing on the website are actually paying the platform to be on the platform. And it preferences lenders that are paying the highest kickbacks and not lenders that are charging the lowest prices. And in particular, this is a big problem for small banks and credit unions and smaller non-bank lenders. They want to have a chance to compete. They want to be able to drop prices and show up higher on these online lists, which can really help them build market share. But if they aren't able to pay as much of a kickback as the big players, they don't even show up on the lists.
Is it the CFPB's opinion that disclosure, having a little thing that says we get paid a referral fee, does that negate this thing, or is that not good enough?
Not good enough. Under the Real Estate Settlement Practices Act, it's illegal to pay referral fees, and we've viewed that as including these kinds of kickbacks. And, we're not new to this. In fact, HUD, years ago, before these kinds of online platforms were really all that popular, they effectively said the same thing. And so our interpretation here is not really a new one, but we felt it was necessary to put it out into the world because the market has changed and these tools have gotten much more prominent.
In the old days, maybe your real estate agent would say, hey, I've got this lender, this broker will really take good care of you, and they're getting a kickback for doing that. Now they can do this massively with all kinds of lenders on a website, and you may not even realize it.
That's right. It's effectively the exact same thing, except it's all done digitally and automatically and not with cash in envelopes passed under desks like it used to.
And it skews the marketplace. And it's interesting because what you pointed out here was, well, we always think of the CFPB looking out for the consumer. By having a fair marketplace, it also helps the businesses. You're talking about the small banks and the small credit unions. An unfair marketplace hurts them as well as it hurts the consumers.
That's right. Small banks and credit unions offer, often cheaper prices, and they're trying to find a way to get their products out into the world to get people to see them. And these online tools can be a really, great way to do that. But if they can't pay, the kickback that larger entities can pay, they don't show up on the list. So it's a problem for them as well.
The CFPB might be able to help you when you feel you're cheated or deceived. We'll talk about that next. This is Consumerpedia, powered by checkbook.org.
Consumerpedia Fast Facts. More than $16 billion. That's how much the CFPB has saved customers since 2011. through monetary compensation, canceled debts, and other consumer relief ordered as a result of enforcement actions. 192 million people, the estimated number of consumers or consumer accounts eligible to receive relief from enforcement actions. $3.7 billion, the approximate total of all civil penalties ordered as a result of enforcement actions.
The Consumer Financial Protection Bureau, the CFPB, has a public complaint database. So, Brian, what happens when someone goes online and files a complaint?
Well, we have a state-of-the-art complaint website. It's not a typical government website. It's much more intuitive and user-friendly than you might expect. When you submit a complaint, the system walks you through submitting your information, and then the complaint is sent to the company for a response, and the CFPB monitors the response and keeps a record of it, and often the company provides the relief that's requested if it's a complaint that has merit.
And anybody can see this. This is a public database that anyone, whether you've complained or not, can look at if you're making a decision and see which banks have the most complaints or which lender has the most complaints and what the complaints are or whatever.
That's right. If you're filing a complaint, you can choose to make the narrative of your complaint public, but you don't have to. It can be confidential. But there is a lot of data on our website because a lot of people choose to make it public. And it's a great resource. I use it all the time. You can filter by company, by region, by product type, by the issue that the person was complaining about. It's really quite a research tool, and I would recommend anyone use it.
Now, the Bureau can't solve individual problems, so why do you think it's important for people to file those complaints?
Well, if you complain, it can solve your individual problem. The CFPB sends the complaint to the company and facilitates consumers getting a resolution. So, often people complain to the company over and over again and they hear crickets, and then they complain to the CFPB and they get an answer. Companies know that if a consumer complains about a real issue and they don't fix it, that the CFPB is watching. We can bring, an enforcement action, or we might bring up the fact that they're not responding to complaints in an exam. And so we do follow-up work, and so they often will respond to a complaint that is filed with us, where maybe they wouldn't have done so if you complained directly to the company.
So this is also a way that you monitor the marketplace and decide how to focus your limited resources.
Yes, that's right. We use the complaint database to prioritize our work, to find issues and get leads for our law enforcement activity. It's a tool that we use in our everyday work.
So before we go, you have a lot of information available on the CFPB website, consumerfinance.gov. Can you run down some of the resources available that our listeners might want to take advantage of?
Sure. The first is the complaint database. You can file complaints there. You can also read complaints. It's a great source of data. I would highly recommend both filing a complaint but also using the database for research. We also have a number of open dockets that people can comment on, where we regularly seek input from the public on issues that we're thinking about. We have a lot of consumer education resources as well. They're organized by product type. You can use this to answer basic questions about features of loan products. I recommend all of it, but personally, I particularly have found the mortgage content to be very helpful. I used it personally when I was seeking a mortgage, and it's really quite helpful information to help you navigate sometimes the complex terminology and the confusing disclosures. It can act as an explainer. And then, last but not least, our website also has a number of resources for lawyers. We have advisory opinions and CFPB circulars that provide guidance on the meaning of our regulations and statutes, and in particular, legal services attorneys or plaintiffs' attorneys that are supporting people in litigation can use those as tools as they're trying to adjudicate claims.
Brian Shearer is a senior advisor to the director of the CFPB. This has been a fascinating conversation, and I want to thank you so much for spending time with us today to help educate us.
Thank you.
Well, that's it for this edition of Consumerpedia. We hope you'll rate this episode and follow us on Apple Podcasts, Spotify, or wherever you listen to your podcasts. Remember, we release new episodes every other Thursday. Another way you can support this show is to follow us on Consumerpedia on Facebook and Instagram, and at My Consumerpedia on Twitter. I'm Herb Weisbaum. Thanks for listening.
Consumerpedia is a public service of checkbook.org. We're a unique nonprofit that helps you save money and make smarter choices. You can count on Checkbook to help you find the best services and avoid the worst, with local ratings that are accurate and unbiased. If you live in or around these 7 cities and haven't joined Checkbook yet, check us out. Boston, Chicago, Philadelphia, Seattle, San Francisco, Minneapolis-St. Paul, and Washington, D.C. To get your free 30-day subscription, go to checkbook.org/consumerpedia. If you like what you've heard, we hope you'll become a supporter by using the link at the bottom of the show notes to make a small contribution each month. Consumerpedia, empowering consumers to save money and make smarter choices.